CATAAlliance TV. One of the areas that we're going to be continuing to provide to the community is advice and guidance on key advocacy areas. So we're joined today by Russ Roberts, who, as you know, has been our lead and champion in the whole area of SR&ED tax credits. So Russ, over to you for your year-end update.
Yes, thanks, John. Yes, there have been a lot of changes this year. Not only has the new legislation coming into effect changed the way the program actually works, it also changes the quantum associated with various claims, etc., and the way you approach claiming. Probably right now of real importance is the changes in the reporting requirements for firms. They start to be effective December 31st, so people need to get their heads around the new requirements. When you file a claim, you file a T661 form, and this form now requires you to put in information about who actually is helping you prepare the claims. It's very clear that the government is looking for an accounting of all people involved in this process. As well, it requires information on fee relationships you have with your suppliers as well. It's a lot of new information. There is going to be a new emphasis on due diligence when preparing the claims, and also in maintaining and keeping the documentation that supports the claims. The expectation is that one is able to demonstrate that what prescribed information you put into your claims is supportable, and that it exists. There are penalties associated with not doing so, and this will require both the clients and also the practitioners, the claim preparers, to develop appropriate processes for due diligence of the claim preparation. Yes, John, there are concerns about the whole process and what information is being requested. I will try to break it up in maybe 3 or 4 parts. The first one is just simply making certain that there is support for what you file and what your client does to keep this material. Claim preparers have to find some form of concurrence with their clients that appropriate support is going to be maintained, and as to the accuracy of what's going into claims after December 31st. It's going to be a real emphasis. Secondly, the information that's being required about who the claim preparers are and the nature of their fee relationships with their clients is business sensitive information. And there is concern about other accounting firms who do the audits of these claims in preparation for the final filing of the full tax papers of a company. We'll be reviewing this as well, and will have access to this type of information. So this is another area that's being questioned as to the appropriateness of these requirements. Thirdly, there are many claim preparers out there who are actually concerned that it will taint the review process when reviewers realize the fees that are associated with a claim, but also they won't realize that actually the contingency relationships, which is the real issue, are therefore a reason that is positive to the program working as an innovation incentive. Specifically, the contingency relationships are needed by many companies, small companies, as a way of getting to bridge funding. And they are cost effective. They may look large initially, but the whole issue of whether they are cost effective and how compared to standard hour billing is not clear. It just simply isn't clear to the reviewers, etc. And the feelings around contingency, what they do to claims, etc., can, and there is concern that it will affect the results. Changes actually are in parallel and consistent with the expectations of the Harper government. they are setting high standards for accountability in many areas of their legislation. And CRA is one of the messengers that has to deal and come up with a manageable approach to this. What has been encouraging to us in talking with CRA, they are sensitive to the complexity of these issues. How they can work through this is going to require good discussions.